Good morning, viewers, and welcome to the second episode of season 3 of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, and with me here in the studio today is Lalit Abichandani, CPA. Welcome, Lalitji.
Thank you.
Lalitji is a practicing CPA with 25 years experience in USA. He specializes in US taxation and has been running a very successful CPA firm. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm provides services to healthcare industry, IT industry, hospitality and entertainment industry. He has done hundreds of voluntary offshore disclosure and streamlined procedure cases and has become an expert in foreign bank account reporting and the US-India tax treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry, and a lot of film personalities. His website is yourtaxadvisor.com. So, Lalitji, before we go ahead with anything, it is April. So everyone is thinking about taxes and tax filing, and last 1 month, it's like sometimes when you talk to people, it's like the whole world has come to a standstill. Everyone is only, you talk to somebody about doing something and they say, no, we've got to file taxes. So there's two important aspects, the income taxes, personal taxes, and the foreign bank account reporting, which has now become equally important. And just within the last 2 weeks, we got a lot of questions on both these issues. So let's focus on the personal taxes first, and then let's go to the foreign bank account reporting, the FBAR issue, which you're an expert in and which we have often talked about in the past. So please give us insight. When people come to you and start to work with you, what are the things that they can do to minimize taxes? Because that's one thing. If you ask anybody, they hate paying taxes. So how do you minimize it? Let's start there, Lalitji.
Pareshji, first of all, thank you very much for the great introduction. And you're absolutely right. I mean, around this time of the year, people don't have anything else to talk about except for taxes. You can often see stress on their head that they have to file these taxes, either pay money or get refund, whatever the case may be. But at the end of the day, everybody wants to minimize their taxes. And primarily, there are 3 areas that the taxpayer should be concerned about. Obviously, they should have taken some action before the end of the year, and we spoke about that in our year-end tax planning shows. But now that we are here in April, I would still reiterate that those ideas are still just as important, and there are primarily 3 areas that they should be looking at it. The very first is IRAs. If you have not done your 401k contribution or SEP contribution, at least start doing traditional IRA or Roth IRA. And of course, for the current year, you should maximize on your 401k or 403b, or even in some cases 457 type of plans that are available in different type of institutions. And the second side is for those people who are in their own business, meaning they are either self-employed professionals or they have some small businesses. Again, in those areas also, people often overlook the importance of pension and profit sharing type of plan or simplified employee pension type of plan. These are SEP plans or KEO plans that they can put away a good amount of money. Now, understand this, these are not small amounts. For a traditional IRA or Roth IRA, you have $5,500 that you can put away. For 401k, you can put away as much as $24,000. And for self-employed, you have a big bonus. You can put away as much as $53,000 before tax. So those can amount to substantial tax savings. Not only are they tax savings, this is kind of a forced retirement fund for yourself, where this money accumulates tax-free. So all your earnings, capital gain, interest income, dividend income is not taxed. So that accumulates tax-free over the period of time that you're working. So you have a good chunk of money available to you when you are ready to retire. The next area that they should be looking at it is tax deductions for dependents. So if they are supporting either their parents or their sibling or somebody within the family, they should try and get a tax identification number for them if they don't already have it, and try and take them as dependents so that they can reduce their tax exposure. Again, if they don't have tax identification number, we can always help them. They can come to us and we will go through the process and get them the tax identification number. They don't have to be green card holders. They don't have to be citizens for that. Even if the parents are visiting here, and as long as the taxpayer or their spouse, they are supporting them, we can then take deductions for them after taking the tax identification number. The third area that people often don't even look at is maximizing the itemized deduction. Now, there are various expenses that you go through during the year for which you may or may not get a 1098 or 1099 from the banks. So go through those deductions. The most ignored area that I have seen is charitable deduction. People give away money in charity, don't even think about it, but I think they should tabulate that and give these numbers to accountants. In addition to that, during the year, Pareshji, you know, we always give bags and bags of clothing to Salvation Army, and don't even think about collecting those receipts and giving it to the accountant. Now, understand this, that you can save as much as 40% on those clothes that you gave away. You know, there is a process that we go through, but definitely it's a tax advantage to collect those receipts and give it to the accountant. Otherwise, accountant have no idea, and he will overlook that as well.
Wow, that's a ton of great ideas, Lalitji. You know, I mean, you went through them rapid fire, but I am sure that most people who even heard it today and heard it in the last show are going to miss out on them. But thank you. These are all awesome ideas. Again, what you have said again brings forth the importance of working with a professional who can ensure that you do not overlook any of these important deductions and end up paying more taxes than you need to. Now coming to the other area where we've had a ton of questions, FBAR, you know. We've been reading about and hearing about FATCA. Then we've been reading about Indian banks. You know, they are giving some kind of, they started giving NRE and NRO accounts some kind of forms to fill in. A lot of the people who are getting those forms do not want to fill them up, or are too confused, or too worried about those forms. And then you know, why are Indian banks really pushing all of this? I mean, end of the day, what they're even threatening to freeze the account or something like that. So Lalitji, you're an expert in this area. Tell us more about FBAR and what's happening out there in that area.
Pareshji, again, this is a very hot topic. In the first 2 or 3 months, we must have received over 100 phone calls just on these questions alone. So yes, the Indian banks are now getting more aggressive because they are tired of giving extensions and deadlines after deadlines. These are basically, Pareshji, these are basically FATCA declaration forms and KYC forms. KYC is Know Your Customers. These have become mandatory for not only Indian banks, but banks all over the world. This is post FATCA law was passed in 2010. US government has gone ahead and have agreements with various different countries. Over 100 countries have signed these agreements, and of course India has signed this agreement in 2014. So since then, the banks have formulated these forms, and now they are pushing, and early on they had given deadlines and people still had not reported them. So now they are really getting aggressive, and they are forcing them to either freeze the account or close the account. But understand this, that even the banks themselves are under scrutiny. Under FATCA law, they are required to collect this information. And not only are they required to collect this information, they are supposed to hand it over to RBI, and that is Reserve Bank of India, and the Reserve Bank of India is then supposed to report to IRS. So not doing so, they will be at default. So that's why they are pushing this, and if you don't do that, just as you suggested or just as you said it, they will either freeze your account or close your account, thus forcing you to fill in this.
Okay. So, but you said that the information will be given to the IRS. So how does that affect the average taxpayer?
Paresh, the information that they are collecting is your details, your passport number, your social security number, your status, where you are, what kind of visa you have. So this is all of your information, personal information going to IRS, along with the information about the bank where you have the account. Now understand this, even there, how much bank balance do you have, where you have the account, which branch you have the account in. All of this information is kind of digitized and sent over to IRS. So now IRS will have this information. So for those who have been reporting for last 5 years, those who have been filing the FBAR reports and have declared all their financial assets, they have nothing to fear. They can just fill in the details. Even though these are personal details, they have nothing to fear. They can give that information. There is nothing wrong in having an overseas account. So by all means, give those details. But people who have not been doing a foreign bank account reporting, they are the ones they have to be afraid of, because now the IRS will have information about you and your account, including your social security number and your address where you are. So it's important that they clean up their mess and be current with their FBAR filing before IRS starts coming after them.
Okay. Then again, there's been questions in one area. I'm going to take like maybe 8-10 questions and combine them into one question as two parts. So first, let me ask you the first part first. Are these forms only to be filled in by those who have more than $10,000 in the accounts?
Paresh, it really depends. It's a little tricky answer to that. Even though we keep talking about this magic number of 10,000, this $10,000 the limit is only for filing the foreign bank account reporting, not for the forms to be filled in India. If you have an account and they have sent you these detailed forms, that means you have been identified as having a non-resident account. Now, it could be non-resident external account or an NRE account or an NRO account, or you might have an FD that you may have inherited from your father or grandfather, and they identified that you are the beneficiary of that account and you live overseas. So they will collect this information. They need all this financial and other personal details to be collected by them so that they can report it correctly. Now, the question that you asked is, do they have to fill in if it is less than 10,000? Even in our personal income tax return, Pareshji, on Schedule B at the bottom, there is a question, do you have a foreign bank account? Now, it doesn't matter whether you have $10 in the account or 10,000, even if you have $100 in the account. The first question is, do you have a foreign bank account? And that's when you have to write yes, if you do. The next question then comes is, are you required to file foreign bank account? So, regardless of whether as long as you have the account in India, you are required to fill in these detailed forms, both forms, the FATCA declaration forms as well as KYC forms. KYC, as I said, was the know your customer. So the bank wants to know you, who you are, where you are, so that they can accordingly report this. Now, this is not only just for United States, this is throughout the world. So whether you go to Dubai, Singapore, or in any part of European countries, including Switzerland, which was known to be hiding place for people opening the bank account, even there they are getting these FATCA declaration forms and KYC forms. So those days are gone when you could just open the account and not declare.
Wow. Now that's very interesting to know, that how detailed we have to go into. But then there's a follow-up question, which is also part of the same question in several. What if we don't want to fill these forms? What happens?
Pareshji, that's the risk. Now, if you don't fill up these forms, you will be marked that you are not cooperative. So the banks at the other end, they still have your money or they still have your account, and they will try their best to collect their accounts. So next time you visit their branch, they will catch you. Or, so my suggestion would be that if you have not done foreign bank account reporting and you have been receiving this FATCA declaration form and KYC form, to start reporting the foreign bank account reporting first. If you have multiple years that you have not done, as you know, and we have spoken about this, you can go through a streamlined process or an OVDP process and be in compliant. And once you have done that, you can start filling up these forms and you have nothing to fear.
Lalitji, there are lots of questions here. Unfortunately, we seem to be running out of time, but I think you can take the last few seconds just to quickly summarize what you would tell the average viewer about FBAR.
So Pareshji, very quickly, if you have an overseas account, NRE or NRO account, definitely come forward and file the FBAR reports. Once you have started doing that, fill in the FATCA declaration form. You cannot avoid it anymore. And if you have multiple years that you have not done the FBAR reports, definitely go through the streamlined process. And if you need any help, we are there to help. I've been helping people for over 5 years now, and we have done hundreds of these cases. We will definitely be able to help you and minimize the penalties.
Well, thank you, Lalitji. That was great information. Really appreciate all this awesome information. Viewers, as you can see, the process of taking any kind of deduction to help you minimize the taxation and to tackle all these issues connected with FBAR and FATCA are very complex. Please consult your CPA or a correct professional. As Lalitji mentioned, he's a great resource. You can reach out to him at lalitcpa@yourtaxadvisor.com or give him a call at his office. Look up yourtaxadvisor.com, his website, and you will get his number. Reach out to him. And viewers, we shall catch you in 2 weeks. Enjoy the tax season. Thank you.
Thank you very much, Pareshji. It was great.